We start this segment. If you're new to it, you should tell us what your name is first in the messages that you sent us, the stock that you want to know about, and also the duration that you would like to hold it for. Is it a short-term query? Is it a long-term query? We've got a question coming in from Padma, and she's asking about Sun Pharmaceuticals. She bought this at levels of 680. The stock is in focus today, of course. It's gaining about 1% or so, and it's at 770 right now. She's looking at short-term gains on the stock though, Kunal, and she's wondering whether to hold on to this or should she switch to something like an IRCTC or a Canara Bank.
So I think it could be an interesting play. Difficult question, frankly, Alex, because both Sun Pharma, I think from the buy price of the investor or the viewer, I think looks attractive because the stock is now at 770 odd levels. It's trying to come back again. It's been a strong performing pharma name on the large cap side, but somehow it's gone into a consolidation in the last 1 month. So I believe the prospects over the near term look attractive. Now it depends that how the entire portfolio is positioned for the viewer. If the viewer wants to look at having some high beta names, then probably shifting towards maybe an IRCTC or a Canara Bank could actually turn out to be a good play. In fact, I would probably also look at some of the names like Axis Bank at current levels of 705, 706 where the stock is trading. I think it also looks very attractive. So I would suggest it's prudent enough to shift from one large cap name to another large cap name rather than moving up from a large cap name to a mid cap stock. So I would suggest that you can switch from Sun Pharma towards maybe an Axis Bank at current levels.
All right, this stock name is CAMS. Today, like I mentioned earlier, also there was a big block deal that happened in this particular account. After that, the stock is down over 5% in today's trading session. And this question is for you, Vijay. I have two viewers asking about CAMS. First one is Prakash. He wants to know whether it's a good time to enter CAMS for a 1 year period. Is it the right time to enter, or should he wait for some more correction? On the other hand, you have Soumitra, who I believe is already invested in CAMS. So he wants to understand what exactly has happened. He wants to know whether the promoters have sold off shares. If so, how does the counter look like to you from here on? Because I believe Soumitra, as far as I see in his portfolio, he's a long-term investor. So is it anything that a long-term investor should get perplexed about? Does it make sense to stay put with CAMS? One wants to know whether he should enter. The other one wants to know what should he do with his holding, Vijay.
So let me tell you, we have to understand what kind of business CAMS is in. So primarily they help all the back-end processes of the mutual funds and the equity equity back-end. So the kind of interest we have seen in the last 1.5 years, the number of accounts which have been added. So there's a lot of business which is going to come into CAMS. Yes, the markets were overheated, and we saw some correction in the stocks as well. But yes, I think that the stock is a good buy around say 2,700 odd, which it is trading at. And if somebody looks with a 1 year perspective, there's a good possibility that it might touch 3,800 to even 4,000. The reason is one, that it is trading below its 200 DMA. If at all it consolidates around here, I would be really happy. And I see this company coming back strongly. And if somebody has 1.5 years perspective, yes, there is money to be made. So don't worry here that there's something bad which is going to happen. The stock has a strong EPS of about 57 and is already a dividend yielding stock. So I think that one can be invested in such a company. It's almost a debt-free company, so don't worry at all. Somebody wants to buy and get into the stock, you can buy around here, and if somebody already has it, you can average. So I don't think there's any threat in CAMS.
Okay, so this next question, I have to caveat it, Kunal. This is for Syntex, which, as we know, is going through a bit of a torrid time. The stock price is where it is because of that, and we've got a view of Padmaja who's asking about Syntex and Syntex Plastics for the short term. Of course, the latest update on the news side is that there could be potential bidders for Syntex. But in this context, would you say that it is a high risk strategy to get into something like this for the short term, Kunal?
Absolutely, Alex. No doubt about it. Such kind of stocks, themes, which are impacted with a lot of news flow, I think are typically categorized as high risk because assuming if the news flow comes out in favor for stock prices, you would probably expect some price uptake. But if there is any kind of a disappointment in terms of news flow, then you would see these stocks getting into a sharp correction. The more I would say worrying aspect for stocks like Syntex is the fact that these stocks are very susceptible towards hitting circuits. Now circuits on an upside. So if you bought at the stock at lower levels and if it's hitting a high upper circuit, then of course joy is unlimited for viewers. But then the disappointment happens, and the sheer disappointment happens when the stocks actually start hitting lower circuits, and that makes the exit into these stocks very very difficult. So I would definitely recommend that you avoid such names. If you've bought, then I believe you should look to exit, and if you're looking to buy, I would suggest that you should clearly exit such names and not look at investing into these kind of stocks. It's far more prudent that you have consistency in your portfolio and then look at large cap names.
Right, and my next question is to you, Kunal, on a similar name, and that is Vodafone Idea. But no doubt, we've seen a sharp recovery come in about Vodafone Idea in this month itself, in the previous week as well. So Priya wants to know whether she can buy Idea.
I think for Vodafone Idea, it's a completely different case altogether because the stock has been very consistent in terms of price trend. In fact, I was doing this study for Vodafone Idea at levels of 8.5, and there was a huge change of patterns for Vodafone Idea. The stock getting into a price-wise consolidation at a time when the markets were getting into a corrective phase. That was a very good signal that a change of behavior has happened for Vodafone Idea. The open interest had started to rise up for the stock, which means there was long built up. The cash volumes had increased for Vodafone Idea, which means there were delivery based buying for the stock. So a lot of positives. The stock has also confirmed a breakout in the last 1 month post that observation as well. But I believe a better strategy for Vodafone Idea is, and for such high beta names, is to wait for these stocks to get into a zone where there is no news flow, the price activity is subdued, and that's the best time because then the stocks get into a corrective phase. You don't have to buy these stocks at a point when the momentum is very high because of the spate of news flow. Wait out for the stocks when there is like a silent period where these stocks get into a low activity in terms of volumes, and then the price gets into a marginal corrective phase. So wait for those price points. Maybe it could be around 13.5 to 14 levels for Vodafone Idea or slightly lower than that as well. So I would suggest rather than buying at highs, wait for corrections and then try and chip into these names.
Okay. This next question is for you, Vijay. Sushil from Mumbai has bought GIC Re and he's got an IPO allotment, so I believe that he's bought at elevated prices. Wondering what to do based on the fundamentals. He says that he's a long-term investor.
Well, if you ask me, it's a good company to have, in a portfolio. Yes, we have seen a major correction happening, in the last almost 7-8 months from almost 250 to that 140 odd. So I think that, you have to be patient in this company. And it would take time, but yes, it has a very good potential to come back to the old levels. So I would say that all the insurance companies, if you look at post COVID, whether they are general insurance companies or life insurance companies, they have not done that well because the number of claims have suddenly, and this is a reinsurance company as well. So I think that we have to be patient with all the insurance companies. No need to exit. Keep a stop loss. Although I would say a 130 rupees stop loss would be very prudent to have. Otherwise, keep on holding. It requires some patience, but yes, it has the potential of coming back. It has corrected quite a bit.
This one is from Ujwal and this one is for you, Kunal. He wants to know about Avanti Feeds. He already is holding some shares at 640 rupees per share. He wants to know whether he should average his investment or wait for some more correction in this particular counter.
It's a good time to average the stock. It's already gone through a correction from 670 to almost 500 or sub 500 a couple of weeks back, and it's trying to get back into feed, trying to challenge back its 200 moving average on the upside. So my sense is sooner than later, you would probably expect the stock breaking out on the upside. So risk reward wise, I think it's a good level to try and chip in because there is a possibility that over the near term, if the stock consolidates as well around this 540, 545 mark, it could provide a near-term breakout. So I think at current levels should be a good buy.
Okay, the next question is coming in from the UAE. This is from Ravi Chandran, and he's asking Kunal about BEML Lorry, which he has about 500 shares of. He's acquired this at 138 rupees per share. He's wondering whether to hold this for a target of 160 to 170, and can he hold for 6 to 12 months?
So it looks attractive, but even though the stock has gone through a time correction in the last, I think the entire 2021, so there was a phase of rally for BEML Lorry towards 165 odd levels, and from there it's come back towards 115, 120 where it's trading right now. So broadly, you can say that it's gone to a time correction. I would suggest at current levels the risk reward is in favor. You bought at lower levels. It's not as if that you bought at 165 odd levels that you are sitting into deep negative M2M. But I think in this sense, BEML Lorry seems to be a good play. At current levels, I would suggest to average on the stock and reduce your prices to around 128, 130. Then I believe you stand a better chance of coming into profits over the near to medium term.
Right, I can see I have a lot of questions on the technical front, but let me take this one to you, Vijay. Rajendra wants to know about Maruti. He's not basically specified exactly what he wants to know, but I believe that he is looking to invest in it, or maybe he's an investor already in Maruti Suzuki, and he wants to know how does it look fundamentally. Does it make sense to stay invested in? Because off late we've actually seen a lot of brokerages actually revise their targets on Maruti.
Well, I would like to make a major comment here. Lately, Maruti announced that they are going to get into EV with they have a collaboration with Toyota. Earlier Mr. Bhargav said that they have no plans to get into the EV segment as they do not have the clarity on policy, what the government is doing. But yes, the latest announcement by the top management changes a lot of things. Maruti is still the largest player in the market, but yes, they are lagging behind in the EV market, where Tata Motors is definitely moving fast ahead of them. So if at all they need to really catch up with the market, they need to work very fast on the models, and they have to launch it. And I'm sure that with the kind of research capabilities they have and the global behemoths like Toyota as their partners, because Suzuki is by any stretch of imagination also a very major player, especially in the smaller car segment. So I would say that Maruti looks very attractive at these levels, and it has the potential of going back to 9,000 and even 10,000. So keep on buying the stock in corrections. And I am quite confident about Maruti's capabilities, because I don't think that no other, I would say that no other car company knows Indian markets and Indian psyche and Indian customers better than Maruti. So I'm fairly hopeful that Maruti has the potential of coming back if they are foraying into the EV segment. And I'm sure that the kind of price point they're going to come up with is going to be really attractive for Indian customers, and they know the Indian market.
Okay, I'm going to try to get this. We've got a question coming in from Tushar, and this one's for you, Vijay. It's on Pilani investment, which, as I see it, is only listed on one of the exchanges. It's currently trading at 1,911, and the viewer has bought at levels of higher than 2,000. Market cap is about 2,100 crore rupees. If you have a view, could you please give them some advice?
Company of the Birlas, and this company holds stakes in Grasim, in Vodafone, in Hindalco, and all the Birla companies. Apart from that, cash flow wise, we do not see any much cash flow happening in the holding companies. But yes, they have they have some cash flows as well. So holding companies, although they do not surprise you with the price action, but yes, if somebody wants to have it in a portfolio for a longer term, I think that this stock has the potential of going up to maybe 2,400, 2,500 again. So keep on holding with the stop loss, of course, and I would recommend a stop loss of 1,700. It's a bit of a deep stop loss. So have a stop loss in place and keep on holding, because this is one of the most respected groups in the country, and they have done well over the period of last so many decades. So don't worry at all. The stock might have come down, but has the potential of coming back again, because all the holding companies are doing well wherever this company has invested, and it's cheap.
Right, this one is for you, Kunal. This one is coming from Abhishek, and he wants to know whether he should go ahead and buy ZEE Entertainment. And also, he's asking what should be the target for ZEE for the next 2 months. Is 2 months a short period of time for a target for ZEE, or is it perfect if he's a very short-term investor?
See, I think what has happened is, if, for example, if you're looking at it from a short-term play, 1 month, 2 month, then the risk reward is not in favor to enter ZEE at current levels, because the last 1 month the stock has already rallied from 300 to 360. Now ZEE is a large cap name; it's already rallied up 20% in the last 1 month. So, do you expect that the stock can replicate another 20% on the back of maybe some sort of news flows, etc., which is going on for ZEE Entertainment? So I have my own concerns and doubts over there. So purely in that sense, because the stock has risen up in the last 1 month by approximately 20% and more, the upside potential tends to be very less, and the risk reward will not be in favor for when you're looking to buy these kind of names on high momentum names. So either you have a stop loss of like say 10 rupees or 12 rupees at 350, 348, and then look out for targets of 380 approximately. That I think could be a better strategy. But purely as a bigger risk reward, a bigger reward at current levels, I would not suggest a buy on ZEE. I would wait for the stock to come back into corrective zones, say maybe over the next couple of months, or beyond that, if the stock comes closer to 340 or 335, that could be a good level, maybe a midpoint of the recent rally for you to chip into the stock. But from a 2 months perspective, the risk reward is not in favor. I would suggest an avoid.
All right, gentlemen, it's time to hit the rapid fire segment. Do keep your answers as short as possible. We're running out of time. The first one's for you, Kunal. We've got Prasant, who's holding SBI Life at levels of 1,174, asking whether to continue to holding or to switch to something else for short-term period.
Well, definitely suggest to hold on. In fact, it's been one of my top recommendations as well on a positional basis. Very bullish on the stock. Would suggest to hold.
Okay, this one is for you, Vijay. Swaminathan wants to know whether is it worthwhile accumulating Balaji Amines at current levels for the next 1 year.
Well, yes, I think that I'm fairly hopeful and quite bullish on the chemical space. Balaji Amines look very attractive for the next 1 year. My target would be 45.
Kunal, Graphite Industries, I know you have a view. Venkatesh is bought at levels of 360, looking to hold for a year. Should he hold or book profits?
I would suggest to hold on. The stock has already gone through a corrective wave. If the recent rally picks up pace for Graphite, then I believe you should see a substantial upside even from current levels.
Okay, this one also is for you, Kunal. Manas is asking whether he can buy RK Forgings at current market price and what should be the 1 year target for this particular counter.
Well, yes, looks attractive from a 1 year perspective. I would place targets of 1150 or 1200 on RK Forging.
Okay, long-term view. This one's for you, Vijay. CDSL bought at levels of 1,200. Chandan wants to know whether to hold and can he expect 2,000?
Well, definitely, as I said earlier in the case of CAMS, that kind of accounts which have been opened, CDSL has a very clear business model, but whichever way, when there's a transaction in the DP account, they get a fee for it. And the kind of retail interest we have seen, there are, over a crore account, crore accounts which have been opened by the brokers. So CDSL is here to, benefit from this wave of new accounts which have opened. And apart from that, they also have a very decent old business, which people have been investing for a number of years. There's a chance that this stock can go up to 2,000. Keep on holding. Don't worry whenever there's a correction.
All right, and with that, we actually come to the end of the rapid fire as well as query segment. Thank you so much, Kunal, as well as Vijay, for joining us on the show, giving us your take on the AMC counters as well as resolving queries. And for all of our viewers who've actually tuned in and posted your queries and whose answer we couldn't get today, don't worry, don't be disheartened. We will try and take them tomorrow. We will be live tomorrow, so do keep those queries coming in. And with that, we will slip into a break on this edition of Buy Now, Sell Now. But stay tuned more on the other side, so don't go anywhere.
MedPlus Health Services Limited, the second largest pharmacy retailer in India in terms of revenue from operations for the financial year 2021 and number of stores as of March 31st, 2021, now makes a public issue of equity shares of